In this video, we're going to talk about accounting and how the accounting can have an impact on how much you pay in income taxes. Now, I know accounting doesn't sound as sexy as some of the large deductions we've talked about, but it can have a huge impact on your cash flow. So it's really important to understand which accounting method makes sense for you. There's several to choose from, and depending upon your industry, you may have even more to consider or be required to look at. The first two for our service-based companies is cash and accrual basis. These are the two primary ones that are focused on for service-based. If you have a construction business, then there's also percentage of completion and completed contract to look at. So these are four major areas that we'll look at in this video. We're going to look at these four methods, identify how they can apply to your business so you can make an informed decision on which one works best for you. We're also going to talk about two client situations we had. One that knocked it out of the park, had everything in place that needed to be in place to maximize the accounting structure for their business and put a lot of extra money in their pockets. The other one blew it. They didn't have the records needed to make a transition, and it cost them over $1 million in taxes. So let's start off with how this can work for you so that you have a better understanding. Hey, my name's Ed Lloyd with Ed Lloyd & Associates. We help business owners throughout the United States slash their income taxes. If you're interested in learning more about how we can help you cut your taxes, just click the link below and find a time so we can talk to you. First method we're going to talk about is cash basis of accounting. A lot of service-based businesses are on this. So what does cash basis means? It means you report income when you collect the cash and you report expenses when you pay them. For reference, credit cards are considered the same thing as paying a vendor. So if you have a credit card bill, you get the same benefit as that you do as if you actually pay the bill. So why would you use cash basis of accounting? If you have more people that owe you money than you owe money, from a cash basis of accounting, you're going to pay less in income taxes. How do you know if this makes sense for you? You look historically for your business, and then you look into the future. Based upon the trends of your business, is this going to be the best method for you? You can do a simple calculation and help determine that. Next up is accrual accounting. So how does accrual accounting work? It's basically backwards. When you bill somebody, send out an invoice, that's income. When somebody sends you a bill and you have to pay them, that's a payable and that's an expense. Doesn't matter when you pay it or when you receive it, it's based upon the accrual method, which means send an invoice, pick up the income. Receive somebody you got to pay, pick up the expense. How do you know if this makes much sense for you? It's the same principle. You look what you've done historically and how you think your business is going to be in the future. And from there, you can make a determination of, is the accrual the best method for me? There's some instances where it's required. You have over $30 million in revenue, then you need to go to the accrual basis. Entity type will have some determination on this as well. So what if you look at this and say, I need to make a change? You can file or change an accounting method with the Internal Revenue Service and change your accounting method from accrual to cash. Hey, can I do this every year? No. Once you make an election, you're stuck for 5 years. So it's important to plan and try to have an understanding of where you want to go. So now we've looked at accrual and cash basis accounting, which is going to help all of our service-based businesses. What if you're in the construction industry? There are two other types of accounting that we need to look at as well. Which one you use will depend upon your revenue and how your contracts are established. Let's just look at the principles of it so we can get an understanding for that. Percentage of completion. That means you're picking up revenue and expenses based upon the percentage of how that job is completed. Now, if you're in the construction industry, you know that job costing is critical. You'll know what percentage of your job is completed. You'll know how much is left to be done for the job. From there, the percentage of where you stand in the contract is analyzed and your taxes are based upon that. So this is a different methodology than cash basis and accrual. You're actually looking at the jobs themselves and combining that with accrual to determine what your taxable income will be for the year. This type of accounting will be required if you have over $30 million in revenue and have long-term, over 1 year type contracts. So having a good understanding of how your business works in your contracts is critical to make sure that you recognize income correctly if you're in the construction industry. Next up is completed contract. So how does completed contract work? That means you recognize the income and expenses when the job is finished. How can this be a benefit for you? Well, if you haven't completed the job, you're not recognizing the profit on it. This lets you push income from 1 year to the next. It's important to understand this is also based upon the contract lengths. Your contracts have to be less than 1 year. So that's part of the analysis you need to do is understand your contracts and which method of accounting is going to work best for you. So we've covered on four bases of accounting: cash, accrual, percentage, and completed contracts. Now, at the beginning of this video, I promised we're going to also talk about some client successes and failures. Let's start with one of our success stories. I met one of our clients, Floyd, while I was working with Tony Robbins at Business Mastery. He knew he had a tax problem and needed somebody that could proactively help him. So after mastery was over with, we had a long discussion and looked over his information. He had been set up on the cash basis of accounting, which he was allowed to do. Problem is, he's getting ready to get clobbered in income taxes because he was having a great year on a cash basis standpoint, but having a bad year from a tax perspective. He had come to us after the year and was over. So what does that mean? A lot of your possibilities are gone. But looking at your accounting method and making a change is not one of those things that's gone. You're able to do this after the year end, which makes it a great planning tool for after your business year end. So how does this work for Floyd? Floyd was very good at his books. He had his accounting record set up correctly. He had his job costing done. He knew exactly where his business was and exactly where his contracts were. From that information, looking at historic and projecting into the future, we were able to determine that if we converted Floyd from cash basis to completed contract, we were going to save him a ton of money in the current year to the tune of $870,000 in cash. Now, Floyd had a CPA who'd been doing his work for a long time. He felt passionately that we were way off base in our recommendations to Floyd, and this was just going to come back and bite him the next year. I'd already done the trend analysis, and I knew what was going to happen, and I knew this was going to be a benefit for him. Floyd is in a bit of a pickle. He had his old CPA who was telling him, stay the course. I've got you covered. He's got this new guy, me, coming in saying, no, this is all wrong. So where does he go? He initially, of course, wanted to stay with his existing CPA. He had comfort there. Totally understand that. But I was pretty passionate because I knew what was going on, and I knew this is a big benefit for Floyd. So Floyd and I had a conversation, and I said, tell you what, I'll do your taxes on the way that your accountant wants you to do it, and I'll do it the way that I know it should be done. I'll present them both to you. You and your CPA can review it and tell me which way you want to go. Floyd agreed. So I prepared his taxes on a cash basis of accounting, completed contract. Huge difference in the current year. CPA still said, you're going to have a problem the next year. It's all going to blow up on you. Fortunately for Floyd, he listened to what I said. He followed our recommendations. We took him on as a client, saved him $870,000. He was going to have to spend a fortune of his cash flow for his business that he needed for growth and just hand it over to the government. He actually got a $3,900 refund, not draining his cash account. So what happened in the next years where his CPA was forecasting disaster? Nothing. Because what we had structured for him, he didn't pay any income taxes for the next 3 years. So not only did we rescue the $870,000 in the current year, he didn't pay anything in the next 3 years. Huge win for Floyd, extremely happy, and he was able to take that cash and keep running his business, which, as we all know, cash is king in our companies. If we're giving it all away to the government, we can't take it and grow our companies. Now let's look at the inverse on this. We had another client that came to us again after the end of the year. Michelle was not as good as Floyd. And from not as good, I mean from an accounting perspective. She had cut corners, didn't have the records that she needed, focused more on the business, but not running the business. It's critical to have all of the components in place to be able to save you money. Did the same analysis for Michelle that we had done for Floyd. It was easy to recognize there was a problem that could be solved. But here's the complication. Michelle didn't have the records. She hadn't done the job cost analysis. We couldn't prepare the form with accuracy that we have to file with the IRS. And she was not interested in spending the time to do it, which is really curious because it's over $500,000 we're talking about, and she just doesn't have time to deal with it. To make matters worse, she's only a 50% owner. So her and her son paid over $500,000 each in taxes they didn't have to pay. That's $1 million that she really needed to run her business. So what's going to happen with that $1 million? Well, the cash will come out of her business, but now she's going to have to use bank financing where she'd been able to use cash flow before. So that shows you the differences between planning for the different clients and taking the time to make sure that your business is structured correctly and you don't shortcut. Shortcuts can cost you a lot of money. When we come in, we look at a lot of different things for our clients. We'll look at your entity structure. We'll look at missed deductions. We'll look at types of accounting that you're doing. We'll look at investments, all the pieces that are components that make up the income taxes. We spend a lot of time today talking about accounting because accounting, as you can see, can be very, very important. We have to make sure that we're delivering the best value for you from an accounting and a tax perspective. So those are the things we analyze and look at for you. If this seems like a lot, Well, quite honestly, it can be. It takes experience to be able to understand a business operations, to look at cash flow, to understand the proper types of accounting, to look at all the type of tax deductions and put those in place for you. It's not something you're just going to get out of a box. This is something from experience that you need to understand. If you feel comfortable doing this, you've got a good roadmap to be able to do it. Make sure you do this to take care of your business. If not, contact us. We're experienced in doing this for our clients. We can help reduce your income taxes, look at your accounting structure, put more money into your business so you can get a real return on your investment. Because I promise you, you're getting more out of your return on your investment of putting that money back in your business than you are just writing a check to the government. The choice is yours. If you'd like to get started, please find a time so we can talk to you today. Thanks, and I look forward to talking with you.